Hello everybody, welcome to this market report. My name is Christian Charlo. Today we're Thursday, June 18, 2015. Today folks, we have the SPY that actually pursued its rally since yesterday when we had the FOMC announcement. What we believe on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below is that the upward potential of the SPY is going to be limited. We believe that the SPY could actually reach that top towards 213, 214 points and then begin a correction. Because what led this rally is the FOMC announcement. Basically, the Fed left rates unchanged and they say that they're going to raise interest rate, but the pace at which they're going to raise interest rate is going to be slower. So investors interpret that as some kind of an accommodative policy. While at the end of the day, it's really not, because the Fed is going to raise interest rate. Now, with this situation, though, what have been the sectors that stood out? There have been several sectors that stood out on the upside and also on the downside. But this chronicle here is going to focus on the stocks on the downside, mostly energy stocks, where we have seen a lot of weakness. And the sector that is the subsector that is mostly interesting to short is the oil and equipment service sector. It's a clear bearish cycle. There are two strategies you could favor to trade that sector bearish cycle. You can actually short the ETF, which is OIH on New York. So it's an alternative because you can get a wide exposure throughout a lot of stocks. So OIH is actually the best short opportunity for an ETF. We also have on marketgurus.tv recommended one stock as a short among our analyst shorts portfolio. It's CGIS. CGIS, we believe, could actually reach the low of this upward corridor, so towards 1250, 1242. So that will be actually 10%. However, the only thing that we don't like with CGIS is the fact that it's already losing 6.46%. However, we are recommending on marketgurus.tv a half position, but also we're putting our exit point really near, not on the break of that resistance at 1531, because that would be too much of a loss potential. So where is our stop loss on a stock like that? Our stop loss is if ever the stock can actually go above this former support of June 12, 15, and 16. So if the stock goes above 1450, we're going to have to close that short positions. And we have a target until 1250 on a stock like that for at least a 10% gain potential. So marketgurus.tv, that's our pick of the day. And this is why, if you want to make a free trial to have access to all the list of the breakdowns, just click at the link below for marketgurus.tv. There's also another stock that we're hesitating to put. It's Ensco. It's a clear breakdown on that stock. The stock has the potential to reach 2045. The thing is that Ensco normally to get out would have to get out around $24 because that would be a 6% loss potential. But normally the resistance is at around 2470. This is a really short-term resistance. The medium-term resistance is around 2470. And from 2225 to 2470, it's more than a 10% loss potential for not even a 10% gain potential until that former bottom of March. So it's becoming really not that interesting in terms of risk-reward potential. But that was also a stock that we were debating about on marketgurus.tv before choosing CGIS as our top pick on New York. Baker Hogs, also one of the nicest short on the markets. But the thing I don't like with Baker Hogs is that if I put, for instance, a Fibonacci retracement from that top to that bottom here, we see that the potential to stop are really close. First, we have a stop around 61.73, so about $1 below that current price. Another stop around 59. So 61.59 though, those actually don't even give us a 10%, neither a 5%. So this is why Baker Hogs would not be a stock that we would recommend among our analyst choice. Instead of shorting Baker Hogs, I'd rather go with a bearish ETF such as OIH. So overall, folks, CGIS is our best pick. There's other stocks that are shortable such as Baker Hogs or Noble Corporation or even Pioneer Energy Services. But our best pick is CGIS. And all those stocks that are highlighted with an I are all stocks that could potentially start a breakdown if ever the weakness of the oil and equipment sector continues. So overall, we believe that today's rally on the SPY could be short-lived. We believe that the SPY is going to reach the top before starting a correction. And if it does, if the scenario happens, well then those of you who are actually participating in shorting those stocks in the oil and equipment sector will be well positioned to benefit if ever a correction happens on the SPY. However, because a lot of those stocks are taking almost losing more than 4 or 5%, what we recommend you to do is not to open up full positions, but to rather go in with some half positions, just like we have done on marketgurus.tv. So this was Christian Charlo for your market report. See you next week on the YouTube for your other market report.